The Innovations in Finance panel will cover the ever-evolving landscape of global finance and explore strategies shaping our economic future. Michael Roberts will guide us through this dynamic discussion. He is the William H. Lawrence Professor and a Professor of Finance at the Wharton School. Michael brings a wealth of expertise to our panel today. He's a research associate at the National Bureau of Economic Research, and he spearheads the Wharton Financial Analytics Initiative and a Financial Proficiency Initiative.
Our panelists include two distinguished leaders in the field of finance, each bringing unique perspectives to our discussion. Our first panelist is my friend, Rosanna Ramos-Velita. She serves as president of both the board of Caja Los Andes and the board of the Wharton School for Latin America. She's also a member of the board of the Lauder Institute. Rosanna is a prominent figure in finance, recognized as one of the 50 most powerful women in Peru by Forbes. Rosanna enriches our panel with her deep understanding of financial dynamics in the Latin American context. Our other panelist, Joao de Mello, boasts an impressive academic background and extensive experience in economics and public policy. Holding degrees from prestigious institutions such as Fundação Getúlio Vargas, PUC-Rio, and Stanford University. Stanford keeps coming up, right? But Wharton. Joao is a professor of public policy at the São Paulo School of Economics. He is also a partner at Opportunity Asset Management. He will offer valuable insights into the intersection of economics, policy, and finance.
Please join us in welcoming our moderator and panelists to the stage.
Well, thank you for the introduction. I know I speak for our panelists and panelists when I say it's really a wonderful pleasure to be here with you. I'd also like to gently remind you or encourage you to engage with our panel today by submitting questions via the app, which we'll tackle on the back end of our talk. So, given the setting, let me jump right in with a question for Joao. Here in Brazil, a natural starting point when you think about innovation in finance is digital payments. And there's really no one better to have this discussion with at this point than Joao. Can you share with us the intent and motivation behind the Pix digital payment system and how it reconciles or correlates with the actual realized implications? But please keep in mind that not everyone in the audience has engaged directly with Pix.
All right. Thanks a lot, Michael.
Sure.
I really appreciate it. It's an honor. First of all, Pix is a fast payment system. It's like FedNow. If you think of FedNow, like if it were get to be retail, that would be Pix. So it's also, it's similar and was slightly inspired by UPI in India, the Unified Payment Initiative. Motivation. I think since at least 2012, when the Brazilian Central Bank got the regulatory mandate to regulate payment systems. That means payment arrangements and rules book from like Visa, MasterCard, and the Central Bank has, I think, Central Bank and the Ministry of Finance, they wanted payments to be faster and cheaper. And the mandate, the regulatory mandate, was first used to push for the private sector, the payment arrangements, to try and provide that. That seemed like the natural place to start. Mm-hmm. I think given the difficulties in, let's say, coordination and dispersed interests of the industry, I think by 2016, the central bank decided that it would push for a more centralized. Good afternoon, Rosanna.
Good afternoon. Sorry, I was too captivated with the previous discussion, but I promise you, I never arrived late to my Wharton classes, that's for sure.
Yes.
But apologies.
But you make a great entrance.
You did.
Thank you.
You sure did. So the central bank decided to provide the lead the payment initiative by basically providing the regulatory framework and the settlement, the operational settlement platform. Motivation was, again, that the idea that payments could be faster, cheaper, and widely available.
Fantastic. So, Rosanna, perfect timing. Let me ask you to maybe elaborate or expand a little bit on Joao's focus on PIX to thinking
Yes.
about digital payments more broadly in Latin America and perhaps other economies as well.
Well, first of all, thank you for sharing this conversation with you. My purpose in life and passion, and I think it came when I was at Wharton and, of course, the Lauder Institute as well, was asking what was going to be my impact, not at the end, but also during my successful business career. And I was lucky enough to discover microfinance when I was a CFO at Citigroup in New York, where I still live. And that led me to a path of impact investing and financial inclusion. And I grew up, I want to say, as an investment banker after Wharton, working in some of the leading M&A deals here in Brazil as well, in the good old times for Latin America. And now I own a very special bank. It's a microfinance bank in Peru, where we are really trying to figure out, and I think Marcos mentioned it before, how do we use technology to include so many millions of Latin Americans that have never had access to a loan, much less a savings account? So in Peru, we're still dealing, and it's a pleasure to be with you because we look up to PIX as one of the leading platforms. And as we were discussing with Michael, I think in our countries, there are different influences that can either help us innovate in terms of including so many Latin Americans into the financial system. One is regulatory frameworks. It's the role of the central banks in our countries. And of course, is the platform, the technology that we now have access to. So in Peru, we're only beginning. We're still interconnecting different digital wallets. But I really hope that we can, maybe I can invite you to come to Peru and visit our Celtran bank, because what we hear about PIX, and I've been asking all of my friends and everyone in the last couple of days, it really makes a difference. But those are some of the challenges in Latin America. And I think you also find individual innovators, for example, Mercado Libre, right? Which is now also a fintech platform providing access, not only the commerce part, but also getting credit and providing credit to many people that didn't have access before.
Yeah, I think that's a perfect segue for where I want to go to next, which is, if I think about innovation in finance, which is a very broad umbrella, I mean, it's an incredibly exciting time. I mean, AI is at the forefront, but there's so many other technologies and changes happening in finance, particularly as it relates to consumer finance. You can think about universal and open banking and the push globally for that. Crypto's lurking in the background everywhere. So let's use this discussion, initial discussion, as a stepping stone to explore, beyond digital payments. What other technological innovations do you see either in place or on the horizon as playing an important role in finance moving forward, and exactly how so?
Yeah, as I mentioned, PIX is mostly about payments.
Yeah.
And we view the payments as like the entrance to financial inclusion. I believe credit and liability, the side products, are a second step. The strategy that we had in Brazil, I think the PIX experience showed us that the public sector could lead a very innovative technological project. I think this is not obvious to begin with.
Right.
And when we interacted with the private sector, technology was always difficult. Systems and legacy systems are difficult to change. And we learned with PIX that, actually we knew it before, because the Brazilians, they do, real-time gross payment platform since 2003. What is approximately what FedNow is doing right now. But we knew that the technology part was not a big monster. Then we pushed what I think is the second layer, which is, technology is reducing transaction costs, and this will play itself out in an organized or in an unorganized manner. From the regulatory perspective, it's always better to do it in an organized way. So, along with PIX, the Ministry of Finance and the Central Bank pushed the open banking, now it's called Open Finance Initiative, just to be clear that it involves liability and insurance products as well. It's a big technological endeavor, but interconnecting all players and sharing information safely with obviously explicit consent. And the central bank has learned with the PIX process and the PIX governance, the Brazilian Central Bank, to interact with the private sector, to learn from the private sector, but to use its mandate when necessary to implement coordination. I like to emphasize that because we did not take lightly the intrusive part of what PIX is and what open finance is, which means that we're using the mandate to say PIX, for instance. Basically, the central bank said, and it was sort of like an artifact of the structure of the Brazilian payment system, that payment service providers, be banks, credit unions, fintechs, you have to offer the product of fast payments PIX, and it's mandatory if you have more than, say, 500,000 transaction accounts. That helps in solving the coordination problem because it's mandatory that your clients are able to make and receive these fast payments PIX. And it's mandatory that you will share a large fraction of information about your clients with other players. And we know that this is intrusive and it's a little heavy-handed, but sometimes it's necessary to solve coordination problems. When you're talking about open finance, a major thing is what exactly are the specific investments that players made in acquiring information and how to remunerate them. And when you intervene with open finance, basically you're saying, this information that you produced, that you might have an expectation on return on it, will be shared. And this should not be taken lightly. The central bank took this step, having the trade-offs in mind, and I'm very hopeful about open finance. I think it's a major avenue for now inclusion in liability and insurance products. And I think the third step will be credit, because underwriting credit is always trickier.
Yes.
You want to expand on that?
Absolutely.
Rosanna?
I mean, and maybe I'll take the area of my current expertise, which is financial inclusion, and all the work that we are trying to do in order to use digital payments and forward-looking technology to include more people into the financial world. So one area that I'm very excited about, and I know we will hear more about Wharton's AI initiative during the next couple of days, is that in the world of the unbanked, and many of us come from Latin America, but this also happens across the globe, billions of people, especially women, microfinance or microenterprises run by mothers, which are highly profitable, yet lack access to capital. Like, we all know what that is, right? The role of financial institutions such as mine, such as Los Andes, is to, because we're a regulated license, in our case, we really have a banking license, we take deposits from the public. and we take that regulation very seriously, is that we have to demonstrate to the regulators that the credit underwriting process has to be at par as if we were a commercial bank. So imagine trying to go to a little field and visit a family up in the mountains of Peru, and we're going to see how many cows this family has or how many kilos of quinoa this family is growing. And our loan officer has to go there, visit the cows, and figure out how many liters of milk they are producing. Actually, we value them as hard assets. We do a balance sheet and P&L for every microenterprise. That's extremely costing. And it takes a long time to get to scale because the loans are $1,000, $1,500. So scale, as we know in banking, it's pivotal. Now, where I think we can use technology or the forefront, and I think maybe AI, is in developing underwriting models for the unbanked, right? We are able, since I was at Citi with FICO and all the credit cards, and now many digital banks here in Brazil and in Latin America as well, it's relatively easier, right, to take data from us because everybody or all the banks know how much we make, our credit behavior, all the patterns that we have already online, and you can create these models and very easier now, target to each of us. What is the type of financial need that you need right now, and sometimes match it to a commercial product. But that data doesn't exist for a person that's never had a loan, doesn't have a bank account. So we're still in this period of exploration and I think innovation to try to figure out all other sets of data that might tell us what their projected credit behavior would be, and I think open finance is also very important there because it's not only about credit for financial inclusion, it's also about trying to figure out how we help or how we structure products for people who already save, but they save in a different way than we do, not pension funds or stocks or even savings accounts. They do little groups and they save $100 each, and then together they invest in something. So they have different techniques of savings and insurance, right? But that data, we would never consider it financial data for underwriting and regulatory purposes. So I think that's a very interesting new frontier, and I think really with technology, data analytics, we might be able to create something interesting there.
Yeah, so it's very exciting to listen to the enthusiasm that you both express at the potential for technology, digital transformation to impact financial inclusion, potentially financial literacy, social welfare more broadly. But the academic in me can't resist but ask, when I think about innovation in general, right, I think in terms of stimuli and conditions under which innovation can flourish, and I think about impediments that inhibit innovation and progress. Stimuli being perhaps things like efficient capital markets, things like strong legal system, property rights, contract enforcement. And impediments on the other side, market imperfections, imperfect competition, entrenched interests, et cetera. So I'm hoping you can lay out for us what are some of the necessary conditions for the innovation you speak of to actually flourish and to realize the progress we hope that comes with that innovation. And what do you see are the impediments to that progress, recognizing that in many ways innovation, the point of innovation is to generate the conditions for that progress. There's a little bit of a chicken and egg there. So, Rosanna, you want to start us off?
That is a great question. I think in terms of stimuli or what really motivates innovation, no matter where you are in the world right now, you know that technology has changed our lives. And wherever you are in the economic spectrum, that technology is really affecting your life, the way you live, the way you communicate, and also your finance as well. I think in some of the large banks, and I'm a very proud ex-Citi banker, many of our legacy decisions were a bit of an impediment to really go to the next level of digital transformation, but I think now it's really easily catching up. But I think it's also the central bank's roles and the regulators in our countries, which are very different. And it's exciting to hear, for example, Brazil speak about open finance. There are several countries, even the Philippines also has a very good framework already where it's allowed. And we have other countries that are still lagging. And when you don't have regulations or at least some guardrails where you are able to innovate, because you need those guardrails for sure, because you're talking about savings and licensed banks. I understand that. But if they are not at par with what's going on with technology and where other countries are really advancing, we lag. And then the catching up could be more costly, especially in terms of CapEx investment, because technology changes so rapidly. But I think the negative effect is really in the customer, right? Because by now we should have access to all of these platforms that exist in many different countries, but perhaps in some markets we have really entrenched interests, as you mentioned, that limit competition as well.
Yeah. Joao?
I have a very, very optimistic view on technology. So I think technology will solve the problem. As I said, it could be in an organized or a disorganized way. Micro lending, for instance, if it costs you like a couple of dollars for a wire transfer, that makes pretty uneconomical all microfinance. That's why attacking payments first was, I think, a good strategy. I think technology will reduce transaction costs tremendously. And I think that will sort itself out. I'm trying to, put my public servant hat on again. What would be the role of the public sector then? I think that's the crucial one. From a regulatory perspective, I think if you have a strong regulatory mandate in a let's say generally safe institutional environment, I think regulators can do a lot, like I think Brazil showed and India showed with PIX UPI and then now Brazil Open Finance. From the public sector side or like collective action side, and from an emerging economy perspective, I think the trickier part is contract enforcement. Information sharing, I think it's fine. We're going to face a lot of challenges with privacy and digital theft, but I think those are, you can handle those. Contract enforcement is, I think, is the trickier part for emerging, and that's why I said I think credit underwriting is trickier because of that. Yeah. We can have transaction costs as low as we can so that we can collateralize as many little assets that people have in order to underwrite credit. But if contract enforcement is not there, I think it's kind of moot. So our strategy here was include through payments, because technology unbundled payment from the banking services. Payments will produce information. Then you include with something that I think for financial inclusion for the most fragile population is even more important, which is insurance, even before credit. Then you produce information, you share information. Technology and competition will do their jobs. When it comes to credit, all the part that is information sharing, I think I'm very optimistic. The other part with contract enforcement is trickier, and I think we're improving over time. But that's the one that we, as a society, for instance, in Brazil, that we have to focus, so we can enforce credit contracts. And I think that in the private sector will do its job, and technology will do its wonders.
Okay, very good. So it's interesting. We're sitting here talking about financial inclusion. We're talking about P&Ls and balance sheets with livestock. It's a first for me.
I'll show you some pictures.
I look forward to seeing them. But I can't help but think, digital payments as sort of an entryway towards financial inclusion makes sense to me and many, because there's a low sort of cognitive or trust burden when it comes to payment systems. But if we want to think a little bit more broadly about financial inclusion, as Rosanna's pointed out, I think we need to start thinking about issues like trust, like financial education and literacy. And so where in this innovative landscape does that enter?
That's a great one. I'll take the benefit of a second move advantage.
I take the first mover advantage on this one. I think, and this is from my experience, right? And when you get involved and passionate about investing, bringing capital for social impact, you open up your mind and start learning different things that perhaps Dean James is not here, right? Okay. But they didn't teach us at Wharton, which is think of your customers as human beings, right? Think of them not just as one more data point or one more number in a regression analysis, but how you're bringing services, mainly capital, and impacting the life of that family. And that's a different equation or a different mindset that we have to blend in as bankers, because at the end, it is a banking model and has to be so to have impact. So when we speak about trust and education and helping the majority in the world, again, mainly women, productive women, trust new ways of doing, getting financial services, getting insurance, savings, there is a gap. First of all, female entrepreneurs in developing markets have never been considered a key segment of our markets, right? In general, from financial services. And maybe I'm extrapolating a little much. But I have been in both worlds. So when you sit with her and you understand her needs, and you know that she has an Excel faster than what we have because she lives day to day with a few dollars that she has to turn around, sell her tacos or potatoes or feed her livestock, and calculates how much I'm going to sell that day, how much I'm going to pay to whatever my expenses are, laborers, so that the leftover is going to be used to feed my children, right? That's an equation. It's a mathematical equation, but it's also very emotional, right? Because her priorities might be different than when we run an algorithm. She's thinking about her children first. So when we think about building trust in these new technologies and using technology for all of these purposes to bring in more people into the financial world, is to understand that their needs are very different than I think I used to think about when I was at Citi or when I was an investment banker. We have to figure out what are those hurdles for them to understand the technology and trust it. So for example, even though they all know that cash is very dangerous, especially in poor areas, they prefer to have that because traditionally, they were never served by a bank. So now that we're bringing something in an internet form on a cell phone that will not only replace a branch and a manager and all of that, but say, here's where you're going to have your money, but you're never going to see it because it's all digital. It's a huge gap. So that's an interesting part, I think, of the puzzle that we need to solve as we try to build financial trust, basically.
It is, and it's very interesting to hear the perspective from Peru. This is precisely one of the things that we were most anxious about with PIX, is whether the fact that it was instantaneous, the fact that it was all digital and how people would take it. We were very positively surprised by the uptaking of PIX in the sense that we thought there would be a trust problem, that there wasn't. With the benefit of hindsight, at least in Brazil, I think the general public was is very fluent in digital-like payments because of, and especially not the so young generation, because of the history of hyperinflation. And hyperinflation does wonders for financial education. It's very bad, but for financial education, it does wonders. So in terms of payment, we thought that we had that hurdle, and we didn't. But to be very concrete about your question, Michael, after my period in public service, I have less convictions about, let's say, how paternalizing we have to be with some financial products. And I'm going to give you a very concrete example. In Brazil, we have it's called a severance fund. It's financed by sort of like a payroll tax, and it's individual. It's at the individual level. It's your fund. It's at your name, and it's managed by the government. And you can access those funds if you get fired or when you retire. Technology that does wonders with transaction costs has over the last 6 or 7 years, we've seen the possibility of using those funds as collateral for personal credit. So on the technology side, that's solved. We have the systems. A bank can lend to someone and that will be collateralized by their severance funds. If they don't pay, then the bank will automatically, let's say, exercise that collateral. And the collaterals are basically managed by, and the fund is managed by the big public savings and loans institutions that we have in Brazil, federal level, Caixa Econômica Federal. So it's actually very easy. And we have, market structure is fairly concentrated. So in terms of system, you have to plug in, 9 players, differently from the US, that you would have to plug in, at least 1,000 players to make it. But nowadays I have serious doubts on whether, the technology solved it, but how do we regulate that? Should we allow the person to use and collateralize all its severance fund? And what about, macro shocks that will eventually could wipe those out? Are the discount rates, personal discount rates that people have reasonable? Are they making, educated decisions? I think hyperinflation does wonders in terms of financial education for payments. For credit as well, but not necessarily. I think people, so I've came into public service with a much more less paternalizing way thinking than I am now, especially when we talk about consumer finance. I think it's a little bit the experience as a regulator at the central bank and seeing individual cases that, as an economist, you don't want to, get the special case and generalize it, because we know that it's bad for prices if we, but as societies, we're going to have to face this problem and the problem of privacy. I think privacy it's easier to solve than that one.
Well, that's the perfect transition to some questions from our audience, because one thing you can't ignore when we think about innovation is risk. And so whether it's digital payments, whether it's integrating AI into microfinance, or AI into anything for that matter, what are some of the salient risks facing both consumers in terms of uptake and financial inclusion, as well as the institutions that are implementing these innovations?
I'll take this one first. For one, as I said previously, I think it's going to be a big one, including, let's say, unbanked women. And you could say, well, data handling is not a problem anymore. big regression models, and NVIDIA solved it. And we can use data on, social media and a lot of other sources that are non-bank sources to try and underwrite lending. How to get educated consent, explicit consent, I think, and people understanding what they're consenting to, I think it's a big challenge. Digital theft and systems running wild was at least my big nightmare as a banking sector regulator then. I was more on the licensing side, but also we have licensing has to live with supervision. I think that's a big one, and these are like black swans events that can destroy trust, especially in payments. The feeling of a bank disappearing from your checking account, money disappearing from a checking account. I think this is like something that is almost unsurmountable when it happens. As I said, I think there will be an increased role for financial and payments regulation, because technology does wonders, but it's better if it does it in a more organized way. I think it will do it either way, but I think we are going to have to trust a little bit more the regulators on this one, and to organize and try to correct for some excesses that technology might have. Don't internalize, If there is a bank run because there's a problem in the system that some AI model ran afoul, the stockholders of big tech companies are not going to internalize the full cost of that. No. They're limited by being wiped out of their equity share. But I think the cost to society is much larger than that. So that's why I think we're going to have to, on the trade-off, we're going to have to go a little bit more on the regulation side.
Sure, from an externality standpoint, we need
Yes.
government to step in, but that doesn't remove the responsibility from the private sector. And so, Rosanna, I wonder if you can kind of expand and along those dimensions, as well as any other additional risks you might see.
Yeah, well, I always think of my business as a risk-reward proposition, right? And I think also thinking of progress, economic development, not using technology, I think it's a higher risk than, cybersecurity or all the other issues that we have to solve, because I think it's a matter of really helping, especially developing economies, take a leap, increase the market share, increase the markets themselves, create new customers that are active, that are productive, that can have access, and therefore create more local economies and increase our GDPs. I think certainly in Latin America, the political risk continues to be extremely high.
Yeah.
And we have some movers and shakers across the region, in Mexico a few days ago, and we have a lot of friends from there, and also here in Brazil and the rest of the continent as well. So to me is keeping the private sector and especially the central banks independent, right? And that not interventions, and that sometimes I think it's probably the highest risk in many developing countries, right? Independence of the central banks and banks regulators, so that we can have the economies that have an opportunity to innovate and continue to grow.
And independence from political considerations
Absolutely.
as well.
Yes.
Okay, wonderful. So let me, with our remaining time, turn to a couple more questions from our audience. So again, please feel free to engage through the app. So one question that we had was, you mentioned AI, Rosanna, a little bit earlier. To what extent do you see it lifting barriers both for microfinancing when you have limited data on applicants, which is sort of the exact opposite of what AI needs? And what is your perspective on creating some sort of financial data history for the unbanked or those that are excluded from the financial system. That seems like a supreme challenge in some sense.
Absolutely. And for that, I might need some Wharton undergrads to work on this, I think. But I think there are already huge sets of data in what we call the informal markets or the markets of the unbanked that are not captured as financial data. So, for example, in some of the work that we're doing in Los Andes, we are capturing our clients' use of, well, Facebook, WhatsApp, right, and YouTube. Those three medium. They don't use it necessarily yet for financial decisions, but it's giving us behavioral data, right, as to who are they sending messages to, what can we send to them through WhatsApp, and they see it, not see it, use it, or not use it, right? So that's a very, very practical and efficient channel for the world right now. How they get information through Facebook, YouTube, the other media, and start to try out different pilots and see through this media, are they really catching the information that I'm sending, and are they converting into a financial product? So that data is out there. Maybe it needs to be structured and thought of as predictors for underwriting purposes, perhaps. But I think there is plenty of data that we can capture, organize it, and use it maybe in a different way.
So that begs the question, and it comes back to something Joao mentioned earlier about data privacy and the role of regulation of the government. Do they know their data is being captured, and to what extent is that data kept siloed and confidential?
Yes, and I think that's one of, in general, right, policies. So we have a very strict data policy in the country. So the clients know exactly that we have that data and that it's only used for our own purposes or within the institution with their consent, right? So and the idea is so that at the end, they also want to have a loan at a lower rate, and longer terms. So with this data, hopefully that should be a way that we can provide better terms for our clients, right? That's part of it.
So Joao, how can government step in and help with recourse for the consumer, be it in terms of payment systems, some sort of fraud, theft? I mean, that is just such a central concern, especially among older people like myself. How can regulation help with recourse when the private sector, it's not in their interest to help?
Older people like you and I, not Rosanna. Just to make sure, I think technology, I agree with you, it's a major opportunity. And it's not a choice. We cannot put the genie back in the bottle. So just let's try and make the best of it. I have recourse I think it's an important consumer policy issue.
Yeah.
In terms of theft, for instance, digital theft. I think the payment system in general is better equipped to deal with it than the individual consumer. Meaning that I think just up to a certain amount of whatever theft it is, you just have to, I think law or regulation have to say you just compensate and pay for it and spread out the cost through the system. I think it's much more efficient that way, and it builds trust. Obviously, you're going to say, well, what if you have a plug-in and password card, and the system has the, recorded that the person actually put their PIN number there. But the costs of splitting this hair are so huge, and the insurance benefit that you have from spreading the cost through the system, I think it's low. So that one, I think it's very easy to deal with law. Obviously, at a very general level, if you have weak institutions and so on and so forth, my whole argument is a little weakened. But having fairly enough clear law, even if it's very interventionist, if it's clear and courts interpret it as like pro-consumer or pro-banks, I don't care. I mean, it's just that they interpret it in a systematic way. It spreads the cost through the system, and it's fine. We, for instance, in Brazil, we have a privacy law that is fully inspired, basically copied from the general data protection directive of the European Union, that I viewed at first as very interventionist, and this would increase costs a lot. I said, well, actually, it doesn't. The private sector deals with it. And it spreads the cost through the system, and I think it's a fairly cheap price to pay. And this is, I think, one of the ways to not making sure, but reducing the risks that technology will run afoul, and benefiting fully from the opportunities. Again, it's not a choice. I don't view it as a choice. It's out there.
Yeah.
And I think when you think it like that, it becomes clear that don't fight it, regulate it.
Okay. Very good. And I'm going to squeeze in one more question, being cognizant of time. So this is from our audience. Where is crypto going to be in this innovative space in the next 5-10 years?
Yeah.
Both from the private perspective as well as the former public servant perspective.
I think the technology is here to stay. I think it is how we use it and for what purpose, right? I mean, I don't necessarily know if it's a currency like Bitcoin, etc., or it's really the infrastructure and the technology behind that. Peru, for example, is right now in the midst of the central bank creating a digital coin, right? It's a crypto, type of currency. So I think it's here, and it's just how we're going to use it and work well with the central banks and their position in terms of what is the. Are we moving into a digital currency? Is that the case? Is it going to be supported and issued by the central bank? Or are we going to have private platforms with the risks that we already have experienced, right, in developed countries?
Wonderful. Joao, you get 5 seconds.
Crypto, I view it as a distributed ledger. The technology, I think it's fantastic. We reduce transaction costs a lot, and it's all for the good. As an investment vehicle, I think it's like any other ones. As a payment vehicle, I'm a little more reluctant. I think, for instance, its attractiveness in a country like Brazil has reduced a lot with PIX, for instance. Okay. But it will be as attractive as a more organized, fast payment system a place has.
Wonderful. All right, please join me in thanking our panelists.
Thank you.